Yeah, thank you very much for coming to this seminar on Chinese economy. I hope everyone can hear me okay, right? Yeah, so actually my topic I choose is how China can avoid financial crisis. My previous topic in Europe in June is actually the risks and the perils of state-sponsored bull market, right? So actually the beginning, it's actually the stock market manipulation by the government actually didn't end up very well, right? So still struggle, but I don't think they are giving up, right? So there's probably still renewed efforts. But right now, actually, I think I'm thinking about a more serious issue about the risks involving the Chinese economy. Actually, this is not just for short term. I think it's a medium term. So short term, I actually become more positive for the next quarter or two, the beginning of next year. I think there is a critical change in the Chinese political cycle. In my view, the political economy cycle in China is playing a more important role than the just pure economic considerations. So a lot of things happen in China. I try to give some explanation using this kind of my own thoughts. This I don't think other people talk about this. So I think, but to me, is the most important aspect of Chinese policy making and also the result of those economic policies. So the number one, I have actually quite a lot of contents to discuss. So that's my, actually, it's outline. Actually, I try to make it a very logical, story. First, I believe the number one topic is that hard landing actually has already happened, in my view. Right? So the real growth, in my view, is probably 3–4% in China, the first 3 quarters of this year. And but to me, it's not a terrible thing, because despite the slow economy, the service sector is booming. Right? Consumption has been very resilient. The real troublesome part is the manufacturing and investment. Right? But that's all what people actually hoped in the beginning. It's a transformation, right, from the manufacturing-based economy to service-based economy, from investment to consumption. It actually happened much more radically than most people expected. Of course, there are risks associated with that, but it's happening. So secondly, of course, it's not what the Chinese government anticipated. They still put target at 7% for this year. Right? Next year, I believe probably the target will be around 6.7 to 6.8. And next 5 years will be 6.5. But with this such low growth, of course, I think there's something abnormal about it. It's not potential growth rate. Because at this rate, the Chinese economy is suffering from severe deflation. Right? PPI deflation has been over almost 4 years. So in a way, there is must be associated with some policy mistakes, the shocks. And the policy mistakes, I think, has been, I think 3 major policy mistakes I want to talk about. That's why the economic performance has been so poor. Of course, I think there is the latest one is the exchange rate. Right? It's another mishap in my view. So then the key critical part is part 3. Why they're making so many mistakes in the last 2 years? Right? Chinese government have a good track record of managing the economy. So what's going wrong? So that's I try to use a new political economy cycle, the new leadership's different strategy. Right? So that I explain that. And then fourth part, as I mentioned, the turning point for the anti-corruption campaign in China, from prosecution of corrupted official now to the prevention of corruption. So I think that will be very important change. And then the shift from anti-corruption campaign now to economic growth again. So that is why I believe the new stimulus has already started. Not only by monetary policy, but fiscal policy, and plus other tax cut policies. It's a quite aggressive move. That gives hope of some pickup in fourth quarter GDP and the first half of next year. Right? But we know the lesson from 2009 is that this stimulus package probably can help for a couple of years. Right? The medium long-term solution to avoid the financial crisis, in my view, is still the structural reform. The most important part actually is the state-owned enterprise reform. My own feeling is that Chinese, a lot of situations. So I have been doing 2 studies on the comparison between China and Japan in the past, like compared to 80s. Compare, this is the financial deregulation, right? And also a lot of people even compare China with Japan in the 70s, 80s. But I think, to me, more closely, I look at China's kind of situation as compared to Japan in the 90s. It's the zombie company situation, right? So a lot of loss-making companies that were supported by banks. In China today, it's SOEs, state-owned enterprises, supported by state-owned banks, right? So they are losing money. I can show you the charts show severe decline in their profitability, but they are still getting a lot of bank loan, right? That's also the issue about the debt problem, leverage problem, right? About the potential vulnerability of the economy. I think that's the most risky part of the economy, how they are going to tackle that. But of course, the reform, try to tackle this issue in combination with urbanization policy, in combination with other, like go out, like capital liberalization and Silk Road Belt strategy. It's a combination how to solve the problem in the medium term. So I think that there's some discussion, but whether government will adopt that is still a question mark. Finally, I think I want to finish at a positive note. It's about my belief is that most likely China will get a very favorable decision by IMF for renminbi to join SDR in November. So IMF already given China 10 months to implement that if the decision is favorable. Right? So I think we are probably will face a world with a new reserve currency, renminbi. And recent development in China, in my view, there's a lot of positive development, especially regarding capital liberalization, regarding this opening of Chinese bond market of 42 trillion to foreign investors. Right? That's a very significant move. So that's actually that's the structure of my presentation. I try to finish it in probably 45 minutes, and then I really hope to have some exchange of views with any comments or questions. And sorry, that's the problem. I should show this. This is the outline. So the 6 topics. I think it's integrated. It's have some logical link. And so the first part. So why I believe the growth is only 3-4%. And people ask why you get this conclusion. I think it's very easy, but very powerful. First, I believe the Chinese data on consumption, I think it's reasonably okay. The consumption data, 8% growth. Retail sales, 11% growth. Can be supported by a lot of other data, like airplane traffic data. It's booming. Right? All the tourists spending in Japan and everywhere else shows that the consumption power. So consumption around 8% is about right, but investment is about 0% growth. So those accounted for around 50% of GDP, right? So then we get 4%. So if you look at this the investment part, right? And that's from the consumption investment from the demand side of the GDP. If you look at the production side of GDP, my belief is the service sector is booming. Everywhere you go to China, you see service sector is booming. So 8% growth is about right. But then the manufacturing sector is 0% growth. Again, come up 50% share, come to 4% growth. Right? So that make me quite comfortable with my estimation around 4%. So let's see some evidence. If you look at the electricity production, 0%, right? 0% electricity production. I think Chinese government tried to explain this. This is GDP growth rate. And in the past, you can see they are actually quite closely linked, right? But not now. this discrepancy is huge, right? The government explanation is that this energy efficiency, economic transformation, but I don't think it will happen that dramatic. Right? Suddenly, the electricity is not important anymore. Right? And the same thing is about railway cargo. Right? In the past, railway cargo, the GDP growth, but last year or so, minus 10%. Yeah, the third quarter getting worse, minus 15%. It's decline, no growth in railway cargo, right? GDP is still 7%, though which I don't think it's matched. Then, things are even worse in the housing market, right? You can see this is housing starts, minus 16% in the first half, minus 16%, right? Land sale revenue dropped by 30%. These are negative number, right? Not even growth. Tax revenue. I think this also, to me, the very reliable source is tax revenue. It's very difficult to fake tax revenue. They have to spend the money. They have to go to the NPC to report. So in the past, tax revenue growth is normally twice as fast as GDP growth, or at least the same, above. But you can see recently, tax revenue 5%. Right? First quarter even 0% growth, yet GDP keeps stable 7%. Right? So that's all. I think it's evidence, concrete evidence showing the real economy is weaker than real GDP growth. But I have to say, the government actually using service sector and consumption to justify GDP. I think it's right, but the other part is really in the recession, right? Investment and manufacturing sector. So that's why the GDP is much lower. Of course, these days, if you talk about the fake GDP number, it's very, very offensive, right? Offensive. But I managed to publish this report in the top Chinese financial journal, Caijing. Right? So I said that the GDP data is overstated. But I tried to put a positive spin on it, right? Just as mentioned, because the transformation has happened. Right? It's much faster than most people anticipated. The contribution of GDP, if using this calculation, is entirely driven by consumption, right? Not even by investment. It's 0% growth. Right? And on the other hand, even 3-4% growth, you don't see any social unrest. Right? Before, people justify stimulus saying below 7%, there is a labor unrest, the social problem. But if we are experiencing much lower growth, still there's nothing happen, right? So in a way, the stress test showing that the Chinese economy can really sustain much lower growth. And even 4% growth is actually, to me, is not that terrible compared with other countries, right? If the labor market is still stable. So this is the retail sales, right? In real term, in nominal term. Right? I think a lot of people question the consumption power, saying a lot of shops in China have seen decline sales. But I think one explanation for that is the Chinese these days increasingly spend more money abroad, in London, in Tokyo, especially in Tokyo, very visible. The one of the two bright spots of the Japanese economy is Chinese tourists spending. Right? 3 million so far already, and spend by far the highest amount of per capita spending. Right? So in a way, there's a lot of things the Chinese government thinking how to improve the shopping environment domestically, right? Because things are much more expensive in China due to high taxation. So that's the issue. So overall, I think it's a weak economy. That's also I want to show you. It's the profitability. I can think that's why I say there's so many zombie companies. There's also supported by Chinese official data. This is SOE. Their profit last few years is 0% already. Right? Now, last year, start to drop to minus 40% drop in SOE profit. Now, even after some help by the government, still minus 20%. Right? This is SOE. This is a private company, still growing about 6-7%. Right? In the past, private company have 15% revenue profit growth. I think it's reasonable because in China, if you're a private company, you are losing money. There are two choices. Either the boss will close down the company, or another choice is run away to Australia with Australian passport. Bank cannot find them. The bank non-performing loan. It's most part of non-performing loan is due to this reason. Right? Private company run away. Right? So that's why you don't have a zombie company problem, but the SOE. Even though they are losing money, but they still get bank credit. Right? The local governments are not allow them to bankrupt. Keep pumping the money. So that's, I think, the key challenge of the Chinese economy. So that's its differential environment. PPI. This is PPI. You can like this, right? Minus almost 6%. Right? Differential environment for Chinese company. It's a very challenging environment for already 40 something months. But the CPI is still very, very resilient, 2% right now. Right? It's about service. If you look at the composition, it's food and service. It's still rising. Right? That also shows the pricing power of service sector in China. Right? So then the question is whether it's a new norm, as the Chinese government said. It's new norm. It's normal situation. It's called new normal situation. But I don't think so. It's if you think about if you believe the official data, 6.97%, yeah, it's new norm. It's very satisfactory. But if I believe what's really happening is 4%, then it's not a new norm. Something must be wrong, right? So my thesis is 3 policy mistakes. The number 1 topic, I think I've been talking to some of you and in the last year, right? My thesis is the over-tightening in monetary policy that crashed the housing market in China. They didn't cut interest rate. Even last year when the economy is slowing down, Chinese lending rate benchmark is almost 6%, keep very stable. Right? Triple R, 20%, right? Very high. They only start to cut. Because I was actually been debating with PBOC last year for quite a long time. Also, I published one report translated my report into Taijing magazine. It's called "It's Time to Cut Interest Rate and Triple R." It's in June, right? It's like 5 months before the PBOC did, and the PBOC argued against that, saying because last year, the PBOC's Chinese central bank's main theme is deleveraging, right? Deleveraging, and also the cracking down on shadow banking, the shadow banking. I think they have a reason to do so. But the way they are doing it is too dramatic. Right? And to the extent there's no mortgage availability in the first half. So that crashed the housing market. I can show you more evidence why the housing market crash is due to monetary tightening. So that's just, it's last year, I was invited by Premier Li to attend a meeting. So here, this, I presented my view in criticizing PBOC. So saying, I think it's interesting that 2 weeks after this meeting, PBOC cut interest rate, right? Then they start a very aggressive easing cycle. I think that's also the reason behind the stock market boom. But now I think the easing cycle has entered another new stage. It's the latest 2 days, I think a couple of days ago, PBOC announced the expansion of the re-lending operation. Re-lending, which means re-lending is PBOC is lending directly to financial institutions. You can also classify it, call it QE. So they actually expand that program to all the banks that can use their bank loan as collateral to get PBOC funding. So I think that's the monetary policy issue has been solved. But they actually crushed the housing market. It will take months to recover. So the second mistake, I believe, is the fiscal over-tightening this year. Monetary policy last year's issue this year's fiscal policy issue. So what has happened is, I have been warning about it's called the so-called fiscal cliff risk at the end of last year. Right? Why? Because the government introduced the new budget law, and also State Council Document 43. What's that? It's the fiscal reform agenda to limit local government borrowing from the bank and shadow banking. I don't know if you remember last year, every talk about Chinese economy is about local government financing vehicle debt. Right? It's a local debt problem. And then the PBOs, the central bank, took action to reform the fiscal system. But they introduced this. I'm not actually arguing against that measure, but I just think the timing is totally wrong. Right? So what has happened this year? We know, as I mentioned, the housing monetary tightening crashed the housing market. So this is the land sale revenue for local government, which accounted normally for 40% of local government revenue. Right? It dropped by 30%. So when the main source of revenue dropped, economy is slowing down. At the same time, they introduced the fiscal reform that restrict local government borrowing from the bank. So this is the consequences. This is the local government cash account. Right? The revenue, cash revenue dropped by 40%. Their expenditure dropped by 20%. So originally, the Chinese government announcement for fiscal policy for this year is expansionary fiscal policy. Right? But the reality is a tightening. So that's another double shock. The third one is a very famous, stock market boom burst cycle. Right? It happened so quickly. That's beyond anyone's expectation, right? So it's driven by margin financing. I think originally government intention is to encourage Chinese households to borrow more. Actually, the idea is to leverage up the household sector because their debt level is very low, 36% of GDP, right? Compared to US is 78% household debt. But Chinese corporate sector is heavily indebted, right? So using stock market to switch from debt financing model, bank debt financing, to equity financing, reduce corporate debt, right? So then the household start to borrow more. So this is the ideal solution if the stock price is reasonable. But in China, things have to go to extreme. You can see that this is PE, right? PE. For China's small companies, PE reached 140 times. Right? Even for the main board, it's 20 times. Not terribly expensive. Right? But the problem is when they reached this level, the government was also very worried. They tightened the margin financing rule, especially the shadow financing rule. As a result, it's crashed. But I think this is already, a very bad management. But the even make worse is the government spent 2 trillion RMB to rescue the stock market, right? Very determined to rescue, but failed. Then it's a big problem for the government credibility, right? Not only to foreign investors because they are already very, very frustrated by these very heavy-handed measures to rescue, right? Even by arresting a lot of investors. But the domestic people, it's even more angry because when the stock market reached 4,000 level, right, the Chinese official newspaper ran an editorial saying 4,000 is the beginning of the bull market, and also say the bull market may last for 3 years. It will be slow bull market. So everyone, encourage everyone to jump into the market. So people did, and afterwards, another jump in the stock price, then crashed. Right? So that it's very damaging. People think, okay, what government is doing, right? So that's why the government rescued the market when it initially hit this level, trying to rescue the market because they promised to the people, right? And again, when people start to gain confidence, there's something wrong with the government intervention. You know that what story. Another second leg. So that actually, I think, it's very, very damaging. It's a confidence issue. So then the question, I think the key part is why there's so many mistakes, right? I think this is my explanation is using the political economy cycle, right? This new leadership, right? So what's different about this new leadership? I charted the Chinese GDP growth together with the regime change, the government leadership change. Almost every leaders probably lasts for around 10 years. Right? And there are two terms. 10 years, every 5 years. Right? So in the past, 3 leaders all have the same agenda, saying the growth is #1 priority. In China in the past 30 years, growth is the key priority. Right? Everything is on growth. That's why the corruption, environmental degeneration, all kinds of income distribution issue. So that's why Mr. Xi became Chinese leader 3 years ago. He said that the one thing, it's a huge departure from the past. He said, I will not judge official performance, the officials' performance, by their GDP. Right? In principle, it's deleted or changed this #1 priority. Right? And also, they never mentioned it for last 3 years that growth is our #1 priority until 30th of July this year. So that's why I see the turning point again. So in his term, 3-year term, the growth is keep declining, right? Keep declining. So I think that the anti-corruption campaign, I don't know how much you're familiar with, but this anti-corruption campaign is very ferocious. This is the minister level officials have been arrested, right? 95. The minister level or deputy, very powerful people in China, 95. So all this is 2 top military leaders, right, for the last 10 years has been arrested. And this is the former leader, 9 of former leaders that in charge of securities, also in charge of 2 million paramilitary troop, very powerful people. And this is, to me, I believe that's the topest official they're going to after, is the former secretary to the Chinese leader, former leader for 20 years, secretary to Chinese leader for 20 years, Mr. Xi, or Mr. Hu Jintao, the right-hand man, right? So that make me believe the turning point has occurred, in my view. It's after this new leadership's shift priority, the anti-corruption has come to an end right now. So this is the number of ministerial level officials, the number that had been arrested each month. You can see this campaign getting more intensive and start to wind down. And that's one evidence. There's a lot of other small evidence, but I think the key change, I think, is Wang Qishan, the anti-corruption campaign chief, recently said one thing very telling. He said that we need to change situation, that our officials are either good comrades or condemned prisoners. Right? Either you're a good guy or you're a bad guy. Right? So arrest so many people. And everything the past 3 years, you probably read in newspaper, the Chinese leaders talk about tigers and flyers. So their main task is to catch tiger and flyers. But just a month ago, Wang Qishan said something very, very differently. He said our officials are, actually most are good officials. Right? No more tigers and flyers. Instead, he said, we should use education, warning, right? Demotion as the main way of punishment rather than persecution. And I believe next week, the Chinese, the top leadership meeting will officially make anti-corruption campaign shift from persecution of corrupt official to prevention of corruption. So I think that's, to me, a critical important, because if all the leaders' intention is on anti-corruption political, right, and it's very hard to make good policies. One example I can give is, I don't know if anyone is involved in energy sector in China. The Chinese Energy Agency, in oversee Chinese energy policy, half of the senior officials have been arrested. Right? Nuclear, in charge of coal, there's nobody in control. Right? The rest half is afraid of arrest the next day, right? No one knows what's going on. So that's why this kind of policy making is very, in a way, to me, has been definitely severely affected. People are talking about, that's do nothing. That's why it's called. So the interesting thing, the past 3 years, it's anti-corruption campaign. If you do something, we know in China that if you do something, very easily you make some mistake, you will offend somebody, they will report, and then the danger of being caught. So that's why a lot of people adopt do nothing strategy. And now, today, the government actually said they are tackling this do nothing. They actually pay less attention to corruption, but if you do nothing, they will replace you. Right? So that important shift is happening. But I think why it has been such a dramatic shift, I don't know if so. Another important reason behind that, I think, is the military parade. I don't know if you saw this news, 3rd of September, right? This military parade in China is very important. It's always a new leader, right? Do once in his term, right? And Mr. Jiang, this is Mr. Xi, and this is his predecessor, Hu Jintao, right? And this is a leader before Hu Jintao. Mr. Hu Jintao did the one military parade 7 years after becoming Chinese leader. Ms. Jiang did it 9 years after becoming Chinese leader. Mr. Xi did it 3 years after becoming Chinese leader. It's a very strong statement. I'm in control of military. I'm in control of China. In essential, this is the power consolidation statement. Right? So, in that, probably you have this PPT, it's probably clear. Huh? You can see Mr. Hu is not very happy, right? Because his right-hand man had been arrested. That's his secretary for the last 20 years has been arrested, right? And so Mr. Li is also very much supported by Mr. Hu, right, from the Communist League. Right? So that's why I think why the battle come to an end right now. Right? Why now? I think this is my story. 2017, the Chinese Communist Party will have the 19th Party Congress. Right? As you know, in the Chinese political cycle, when the new leader becomes a leader, this is top leadership. Most people is not appointed by the new leader, right? It's by the previous leader, and also by a negotiation between the current leader and the past 2 leaders. But always, the second 5 years, this critical meeting will decide the next leadership. So, out of the 7 top leaders, 5 will need to retire. Right? Who's going to appoint these 5 new leaders? Actually will determine the power landscape in the next 5 years. Right? So that's why I think 2017 is critical important. But just if I'm thinking about Xi's strategy, this is the critical important. If he's doing great, right, appointing more officials of his people, next 5 years, right, he have total control. Then he can do really what he intends to do. Right? So there's only 2 years left. Right? So next year, most decisions will be made already at the end of next year. So in a way, you really have to demonstrate your capability regarding at least economy has to be stable. Right? If let's say today's situation continue, the economy continue to decline from today's level 3-4%, the housing stock market is so weak, people was unhappy, I think it will be very difficult to justify. End of next year, he can say, I decide everything. Right? I think it's very important calculation. So next year, from this political cycle point of view, it's a time to shift to growth strategy. So it's not just a guess. It's in many ways. I believe the stimulus has already starting from July, August. Right? As I mentioned, the first time in 3 years, end of July, the Chinese Communist Party insert back growth as the #1 priority again. They talk about that, right? And the fiscal announced a 1 trillion policy bank loan to finance local government projects. Debt swap, right? 3.2 trillion. Last year, everyone worried about China is about local government debt problem. The bankruptcy and the people say the bank loan will have a lot of non-performing loan, right? The bank problem. So what government now did is 3.2 trillion swap by actually central government credit to replace local government debt. Essentially, this alleviated the pressure for local government. And you can see the bond issuance, policy bank issuance going up. Local government bond issuance started to surge. Right? So the fiscal side is being easing. Monetary policy, as I mentioned, already prepared even for QE. All the tools are ready. And that's the housing market turning around. Right? I think the housing market is very important in China. Then also the Chinese housing market cycle is very unique. Right? It's unique in such a way that normally in other countries, I look at many countries' data, normally it's 10-year cycle, up cycle 10 years, down cycle 10 years, right? Maybe around 10 or so. In China, the past 5 or 10 years, housing cycle is every year cycle. 1 year boom, 1 year. You can see this is out of 70 cities. How many cities see price increase month-on-month basis, right? 2012, 2013. Almost every city except the 1 or 2 cities, Wenzhou, actually see price. Every city see price increase except the 1 city. It's a booming, right? But then, that's what I call the PBOC over tightening, right? Crash the housing market. Some people say, that's maybe because the supply demand, right? It's built too many houses. That's why the turning point has occurred. But my feeling is, it's impossible to imagine that all 70 major cities in China see turning points occur at the same time. Right? So it must be something else. It's the monetary tightening. Right? So that's what has happened, the crash last year. So as I mentioned, after end of last year, they start to ease monetary policy. You can see a very quick response in the housing market. Now 40 cities see price increase or stable. I think things were improving. Sales are picking up, growing by 20 to 40% in the second, third quarter, right? But yet, investment has not yet recovered. It will take 6 to 12 months for investment to recover. So that's why next year, in my view, will be also better than this year regarding housing investment. We are seeing already steady investment. Housing starts. First quarter down by 20%, second quarter down by 16%. The year to date, end of June, end of September, it's data just released, minus 12%. Right? So in a way, monthly basis is start to improve housing starts. So this is some initial, very tentative sign of improvement. We are not seeing much. For example, the automobile sales. This is electricity, housing sales. I think more visible, I think the most important evidence so far still tentative sign of pickup. But one thing I think important, I always look at as leading indicator for investment, is medium to long-term loan to corporate sector. Right. This is a big jump from 100 billion a month now to 400 billion. And normally investment, FAI, investment start will follow that. M1 also surged. Now that's actually the initial sign. But of course, I don't think to have a weak currency is the way for Chinese government. I don't think it's their intention. I found it's very interesting. I think sometimes maybe it's a false mistake, because the interesting thing is Chinese government, PBOC, actually didn't want to depreciate, but then triggered a massive depreciation expectation and also the capital outflow. It's very strange. You know, there was actually puzzling why it has happened. Actually, I can understand the PBOC position, because from 12, for example, they allow the currency to appreciate in real term from this level, 25% appreciation in real term, very dramatic. Against the Japanese, against euro, 25% renminbi appreciation. Against Japanese yen, 40% the last 3 years. Actually, after this strong appreciation of the currency, you can see Chinese leaders' statement, PBOC government statement about currency is always say, now the currency reached a fair level, right? So I'm satisfied with the level, you know, despite all the strong appreciation, right? So what has happened the 11th of August? You can see the red line is the market closing price, daily closing price. It's driven by the market force. The blue line is the daily fixing, it's the open price, influenced by PBOC. So what has happened? You see, since 14, in the most part of this year, the market price is always weaker than the PBOC influence price, right? So what has happened is that if market, for example, closed at this rate, the next day, PBOC set the exchange rate around 2% stronger. Then they start trading at this stronger level. The maximum depreciation allowed is 2%. Then it's go back, right? Then next day, PBOC artificially put a stronger currency. In that way, they prevent depreciation, right? So very clear, their intention is to prevent the depreciation. Why they want depreciation, right? 2011 to 2013 is the other way. The renminbi have appreciation pressure. That's why the PBOC don't want too much appreciation. They set a daily rate, right, weaker than the previous daily closing, right, to prevent appreciation to go too fast. So what has happened? You know, it's interesting, right? The IMF issued a SDR progress report just a week before they made the move. IMF say this kind of daily fixing by PBOC very artificial, right? It's totally different from the market rate. So why you should maintain two exchange rate in a way, right? So what PBOC did is to satisfy IMF, is to unify. So they are saying we are abolishing daily fixing. Actually, instead, they are using the daily closing as a reference rate for daily open. Right? So, but that move itself looked like a unification. But if they didn't explain to the market, right? So what the market people see is this. Suddenly, because the daily open price, they are no longer influenced by PBOC, they are used the daily closing price. it's de facto 2% depreciation. Right? When this occurred, 2% maximum, and next day again 2% maximum. Right? The PBOC, I think, if they intervene the first day to prevent this 2% depreciation, I think they can calm the market, because they never talked to the market beforehand, and suddenly made a move, right? And then the people get panicked, and everyone think PBOC is going to depreciate. So after 3 days, PBOC start to intervene massively. They altogether spend $300 billion actually to defend the currency, actually to make the level back to the original level, like 6.3 or something. Right? Today is 6.3 or something. So the whole episode shows another, you can say policy mistake or the problem. Yeah, I think that's quite strange, right? So doing this without communication. But somehow I understand that for Chinese policymakers, it's a different mentality from the PBOC, the central bank here and the Fed, always trying to use communication as a unconventional monetary policy tool, right, to influence the market. But the PBOC's view, I think they still have the mentality that consider market participants as opponent. Don't want to surprise you and don't want to let you know beforehand their intention. But I think anyway, after this 300 billion intervention, the currency becomes stable. Right? The money outflow start to decline, because the people understand it's not really about depreciation. And my belief is the last visit by President Xi Jinping to the US, I think it's probably they have some common understanding that for China to enter SDR, the US probably will not raise objection in November. As a trade-off, China will keep strong currency. I think that's my understanding is most likely to happen. That's why I become quite optimistic about SDR membership. So finally, I think this is another argument. A lot of people say China should depreciate 10% to 20% because to gain competitiveness, right? Because Chinese currency appreciates so much in the past, they should depreciate 10% to help the economy. A very popular statement in China. But I think that's not going to work. Right? I don't think this is going to happen, because if you think about the huge loss in competitiveness in Chinese price, this Chinese wage last 10 years, 7 times, right? That is Chinese main competitors. Indonesia only in dollar term 1.5 times, compared with 7 times in China, the wage in dollar term. All other competitors. But despite all the loss in price competitiveness, this is Chinese output. Chinese products in Japanese market, in US, EU market, has been actually still climbing. Chinese global market share still climbing, even this year. Right? This is Chinese market share in developing country. It's like this. So despite the strong appreciation, China still have a record high trade surplus. Right? Still rising market share. It's very hard to justify depreciation at this moment. Right? So instead, what China is exporting these days, it's a move, the different product mix is about the machineries, high-speed train, the Chinese leaders visit, right? That's also pushing for nuclear power export by Chinese company, even to UK, right? So this kind of dramatic change in Chinese technological know-how, right? So that's why I say the long-term solution for China is not for depreciation. A short-term stimulus is to fill the gap, but long-term, there is a very ambitious agenda, right? The fiscal reform, financial deregulation, all this SOE reform. But I think two prominent I think the SOE reform, I'm not that optimistic. I think it will take longer. Probably will be after 2017. But these two policies will go ahead. The urbanization, you know, the Beijing, Tianjin, Hebei integration project involve 150 million people, right? Just one province, two cities, 150 million people. So far, all the manufacturing, the key manufacturing, university, hospital, all concentrated in Beijing. Probably most people have visited Beijing. But Hebei is actually one of the low-income provinces in China, surrounding Beijing. Right? And I can give you one example. It shows how extreme this distribution. This is 100 million people in Hebei province. 100 million people, right? It's like a big European country. 100 million. Beijing, 30 million. Around 27 to 30 million people. Tianjin is probably 50 million. Out of top 100 universities in China, 25 based in Beijing. Actually, 0 based in Hebei. There are 0 university. In Tianjin, probably 1 or 2. This to show the extent of distribution about social service, about everything. Right? Company, automobile company, all in Beijing, most in Beijing. Hyundai Auto, Mercedes-Benz, Beijing Jeep, everything is in Beijing. Even before it's capital steel, still producing everything. Why? Because in the past, every provinces, there are 3 provinces, 2 city provinces are competing for GDP, right? You get whatever you get, polluting company, anyway, it's GDP to the city. So that's why Beijing used its position to get all the manufacturing facility in Beijing. But now the new leaders say it's not right, right? If you think about, you consider it's called a greater capital area, integrate. Then the most important thing is to move away these manufacturing sectors from Beijing, hospitals, universities, away from Beijing to these regions. So that involves huge amount of restructuring of the productive capacity and the infrastructure also. That will entail huge investment in the next 5 years. Right? Starting from this year, I think there's only probably a strong leader's benefit is Mr. Xi ordered the relocation of Beijing government from city center to Tongzhou here. Right? It's a strategy also to facilitate small town development because everyone wants to move to Beijing. Beijing is traffic jam, pollution, right? So in order to actually liberalize Hukou, actually you have to relocate the Beijing city here, and then all the Beijing university hospitals will move away from city center, at least establish other. Then the Hebei, a lot of small second-tier city will become an important industry center. And so Beijing, they eliminated the manufacturing center, right? Economic center, financial center role from Beijing. It's the only political center, cultural center, innovation, R&D center, and also international relation, like a diplomatic center, right? But all this will move to Hebei. That alone, just this year they identified 7 areas like subway, rail, bus. There's, in the past, the bus network or stop here, everything stop here. Beijing stop here. There's no connection, right? So they have to interconnect all these things. That is to boost domestic demand. That is one important theme. Another one is, I think Xi Jinping, president to UK, is another example of this strategy. Using Chinese foreign reserves, savings, right? Switch from the treasury bills to FDI, direct investment, loan to those countries, all the way to Europe, right? The train, high speed, the nuclear, all the equipment exporting strategy. In a way, it's the export of excess capacity, but at the same time, using Chinese financial strength to make it happen. Right? I think in a way, if you're from the very top level, it's a very good strategy because like Southeast Asian country, India, Indonesia, the one hindrance to growth is infrastructure, right? Lack of infrastructure. But China have the money, the know-how to build. That's how the strategy can, and also solve overcapacity problem. But so recently we see some progress, very slow progress, but start to take shape. Like, in a way, I can think about the nuclear, about high speed. It's also to UK. It's also part of the extension of this, using Chinese financing to help build infrastructure, right? Then to be involved in this construction, right? That can facilitate better growth for China than just buying the treasury bills, right? So that I think will start to show some impact from next year. So the SOE reform is, to me, it's critical, as I said in the beginning, right? It's a future efficiency of the economy, innovation to release resources for private sectors, right? To deflate the zombie sectors. But the difficult part of SOE reform is it will start with the decline growth, right? Because you have to close a lot of loss-making companies. So that, I think, will not be happening next year, because next year the key target is to revive the economy, revive the growth. That's why I think probably 17, when all the political, picture is being more clear, she probably can really have more power to push for the very painful reform. Of course, that's the hope, right? So finally, China is facing another big challenge, is the population, right? Right now, the working population, that's the Chinese working population, has started to shrink already now. Right? The real population will shrink in 2025, but you can see the aging population problem start to be very significant. Right? So finally, the only way is really to strengthen reform by the financial sector. Better allocation of resource, SOE, all the reform I mentioned. The Chinese currency. No one expect 2 years ago, Chinese currency's global share of global payment is probably similar to Thailand. Okay? This is 2013, probably below Thailand level, Thai baht. And this year, it's already the 4th largest payment currency in the world. So this progress about capital calibration really be global circulation. So that's actually, it's my roadmap towards convertibility and the global reserve currency. That's one chart I made in 2011. It's a roadmap. The capital calibration, every year what they need to achieve. Offshore renminbi center, about the exchange rate flexibility, intra-liberalization. At that time, I present this roadmap in an integrated strategy. You have to achieve both 4 areas, right, to minimize risk. And PBOC have been actually doing accordingly. I think it's very much in line with this. But this is a study I initially start to do the research in OECD in 2000. Right? We wrote a book, China and the World Economy, showing this. And finally it's come to an fruit. So I think that, to me, it's quite positive, especially in November, when this has been announced. Yeah, there's a boost to confidence. That's coupled with the 13th five-year plan, which will start next year. So short term, I become more constructive, right? But the medium, longer term, the challenge remains that the key reform agendas had been presented. I think important to see whether they will have political determination or political will to push for that. I will stop here. Thank you very much for your attention.